It is clear at this point in time that the market is starting to panic. Over the last month, we're down 8%. If we go from highs around February 19th, we're down closer to 9%. So the market is worried. Worried about the economy, worried about inflation not cooling off, worried about tariffs, whatever it may be. The market is like, uh-oh, this isn't particularly good. So down 9% is a lot, but probably many of you watching this video are already probably many of you have already made moves in your portfolios. Maybe you're worried about making moves. Maybe you're thinking about making moves. I'm going to dive into a number of things surrounding this. What I'm doing, what I think going forward, how I'm preparing, how I have already previously prepared. And spoiler alert, a lot of market downturns is not necessarily what you do in them, but what you did before them. So let's dive into this. So before going forward, let's work our way backward a little bit. I mentioned on this channel many times, and even in this video, that the best thing you can do for a bear market, hear me, not a recession, right? If there's a recession, that's a different thing. If there's a serious recession, everything's selling, that's different. But if we're just in a bear market, we're in a downturn, we're going to go flat, we're going to go down for a year or two, the best thing you can do to prepare is what you already did. And what I mean by that is there's stocks that do better in a bear market. It's almost like someone could have predicted the future, and it's because maybe I have. There are certain stocks you can look at history that will perform better during bear markets. There's some of them I've covered on this channel many times. Some of them in individual videos, certainly when I cover 2 or 3 stocks fairly quickly. Probably many of you have seen those. Those perform particularly well on my channel, but I can only do so many of them because I'm not just going to throw random stocks at you guys. But here are some stocks that are doing particularly well over the last month. Vici I've covered many times. We're up 9%, almost exactly inverse. Now, my assumption with this is that people aren't as worried about high interest rates, like extremely high interest rates, because if you can park your money in a CD, get 5%. Vici probably isn't going to do as hot during that. But assuming it's just a bear market and we don't have crazy high, maybe we're sitting somewhere in that 2.5 to low 3s inflation, which is still high, don't get me wrong. It's still not crazy high. So you probably aren't going to see crazy high interest rates. Of course, I cannot predict the future. But Vici is a stock that has done well over the last month. And probably if we're in a bear market, you're going to do well because it's going to run sideways. You're going to get that 5% yield. And then here's another one, Cigna. I've covered it on this channel. No one cares about this stock. It's a very good value stock. Its P/E ratio is misleading because they have some GAP things throwing it off. They're up 9%. They're up actually more than what the market has gone down over that time frame. Kroger, they had an earnings, so it's a little bit different, but they're up, 3-ish%, which, like I said, compared to the market being down 9, you're performing 12% better, and you get that 2% dividend yield. What's Cigna's yield? Yeah, about that same 2% as well. HCA, this one's flat, so you're still performing 9% better than the market. And this is a stock that has a very low PE ratio. It's unlikely, unless we're in a serious recession, to see these drop. And like I said, if we're in a serious recession, all of these will drop. When people start liquidating 401ks, which is what happens, all these will go down because people have ETFs and they own all these stocks. So things will go down that. But if we're just in a bear market, yeah, just a poor economy, not crazy bad, nothing like that. These are stocks that are all going to perform well. And they're all stocks that I have covered on this channel. Some of them many times. Vici I've covered so many times on this channel. They're all stocks I own. And it's really important because if you own all tech and you're getting slaughtered, it is very easy to just cut your losses and sell. But if you have stocks that are performing well, they're actually up when everything else is down. And you can sell some of it, maybe all of it, and buy into a good stock that is just getting crushed because that's how the market views it. There's plenty of amazing stocks. You own them. Maybe it's a Qualcomm, maybe it's a TSM. There's plenty of stocks getting crushed right now because that's just what the market is worried about. American Express, it's down like 20-25%. They're worried about, obviously people stop spending as much. They don't grow as much. They're a credit card company, but things like that. So it is very important, although it is sometimes boring. It is very important to own stocks that do well during this type of market. Okay, so maybe you prepared well, maybe you prepared terribly. Doesn't really matter at this point. Assuming we're actually in a bear market, it's going to keep going down. So what am I doing today? Today I'm doing absolutely nothing. If this were to continue, let's say we fall another 9, 10, 11, 12%, yes, that's what I'm going to consider heavily, selling some of those stocks, some of those value stocks, not all of them, but some of them. Trim a little bit, and then either I'm probably going to move into some tech stocks. that are down considerably. Now, you might be saying, well, it's probably not the bottom. What if it's and you're right, it probably isn't the bottom, but I have a pretty stable job. I'm pretty stable financially, so I can keep funding, putting money in, and DCAing all the way down to freaking zero if I have to, which is not going to happen. But if it did, I would do that. Because even though, yeah, a lot of your money, you probably aren't timing the bottom perfectly. If you look historically, buying in on downturns is how you make a bunch of money. And you look silly, you feel silly because you put in money, and then you look and 2 months later, it's down 15, 20, 30%. You feel like an idiot. But it's that reason why you're going to make so much on the way back up. Obviously, diversify. Don't own 50% of your portfolio in one stock, because yeah, if it's a really bad market, there's some stocks that are probably going to go under. A really bad economy, not market. You know, the stock market is just a reflection of what companies are doing and how the economy is doing. So yeah, I'm not saying, oh, go all into this 1, 2, 3 stocks, but if you put in a bunch of money on a bunch of, like Apple, Google, Nvidia, Meta, TSM, AMD, pick your flavor of stock, you know, a lot of the software companies, that you're going to do fine. You're gonna do great if you're buying in at like 30, 40. It's, yes, there's a chance stocks go under, and you're gonna feel dumb doing it, but it's gonna pay dividends. So I'm doing nothing today, but I prepared, and I'm going to keep putting money into the market like nothing is happening, other than I'm gonna focus on the industries that are getting hit harder. And when tech is doing incredible, they're hitting high. I mean, like, look at this. When ASML, I love ASML. I don't necessarily like it at 1,100, certainly not at today's market at 54 PE. When stocks were hitting highs, you know, 1,000, over 1,000, over 1,100, that is the perfect time to be buying value stocks. And I was doing that. I was buying Vici right around this time. I did very well in that. I was buying it around 27. Inverse the frickin' market. Not always. You should buy into great companies at meh prices versus meh companies at good prices. You know, that's a Warren Buffett quote. I did not perfect that. But when the market is doing, you know, when certain industries like tech is doing incredible, awesome. You can still get more tech exposure, but when value is being underappreciated, that's a good opportunity to buy it. And my last piece of advice, stay calm, stay rational. I know there's a lot of money you have tied up in the market. It sucks to see it go down, but that's the reality. And in the long term, if you just zoom out, you're going to be fine. I mean, guys, you could have bought in middle of 2024. You'd still be up. Like, seriously. That's how the market works. You just zoom out, understand where we were, where we are. I mean, look at the last bear market, 2021 to 2022, late 2022. Yeah, that wasn't particularly fun. Things change quickly. But investing in the market long term is going to yield great returns. It's not always fun, but that's how it works. So I appreciate all for watching. If you enjoyed, like and subscribe. I hope you guys are doing well. I'll catch you next time.